Hi, welcome to Main and 5WH into the social section of awareness and technology. In this session, I'm going to talk about my personal experience in stock market. I'm not a stock market expert, but with my technology knowledge, I have some observation to put across, maybe 15 observation which I have put by which you can really make some good money. In worst case, you can at least keep your capital intact, because one of the reasons why people run away from stock market is they lose a lot of money. So these 15 rules are my learning, practically hands-on. So I've worked across the brokerage, I've done a lot of analysis, read a lot of books. It's a good summary for you to follow if you're a beginner. Even if you're an experienced person, you might get some inputs from it, because I've seen this like working at a very high level for me. So based on my time in next 3-4 years, I'm sure to make some good money out of this. Okay, so let's see some of the rules. I'll explain this from my practical. So do not, number one is do not expect any logic in the stock market. Okay, so initially when I got into the market, I was trying to learn, because I came from a mathematical and technology background. I could really get into a lot of websites. I downloaded a lot of tools, started doing technical analysis, so started seeing the graphical charts. But what I observed over a period of last 1 year is stock market is driven by a lot of news and sentiments. Okay, and sometimes it is technically driven. So do not really become a kind of a high level statistical person and forget, like, people see, like, I'll give you an example. If there is an announcement of a government trying to give some kind of a basically, if the announces like there'll be some package coming for COVID, or if there is a vaccine announcement, if there is vaccine working positive, vaccine working negative, there is Brexit coming in, Brexit not coming in, you can see the stock market behaves based on that, because there are a lot of attached sentiments to that. Okay, so instead of being logical, try to follow the market, go in the direction what it is going, and try to understand it by connecting the dots. Okay, that's number one logic. So initially I made a mistake of going by numbers, but it may not work always. Number one. Number two, neither be optimistic or pessimistic, have a balance. It means, like, do not really foresee that whenever you think it will go up, it might go down. Whenever it go down, it might go up. So you really cannot be optimistic or pessimistic, just have a balance, right? And if you're consistent for a longer period of time, then that's better for a stock market. So for that reason, to be optimistic, you need to buy only quality stocks and hold. I'm talking only about an investor, not about a trader. If you're a trader, you are on a different ball game. Don't even see this video, just cut the video and leave. Okay, so if you're an investor, just buy quality stock and hold, and there will be those ups and downs which keeps coming in. Just be optimistic, and whenever there is some news about this big companies coming in which is pessimistic, just use this as an opportunity to buy more. Okay, so this is provided you have done your due diligence to buy stocks which are typically quality stocks. The business is good, and the franchise is really doing well in terms of scalability. They are trying to take the cash and putting back to the business than giving much of dividends. So you can see that the company is going in the right direction. Those rules I'm not covering up here, but you have to really put in your top 10, 15 quality stocks which you want to invest for the next 5 years, 10 years. Okay. Second, last thing which I want to tell about quality stock, irrespective of whatever stocks you buy, at least have a weekly due diligence to see whether there are any bigger news coming. Even a high quality stocks can go down. So it's very important. It's your personal money. So it is very important for you to watch, irrespective of what the news channel is telling you, whatever magazine is trying to tell you. Okay. The next is to avoid penny stock or trading unless you have mastered the art. It's not bad, good. We are not trying to judge anybody here. If you're ready to take a huge risk, then you can go for penny stocks or trading. Okay, and you can use a lot of options, a lot of ways by which you can do alternate money in stock market. But it is meant only for people who understood it, right? If you are a newcomer or jumping into based on what others are telling, you might burn your fingers shortly. Okay, so avoid penny stocks or trading. If you're an investor, you will never go there. But even if you're a beginner, if you want to try it, do a lot of research. Maybe you buy 1 or 2 penny stocks and see what happens for 3 months, 6 months. You understand it and then invest. So market will fall and rise, just be invested in right stock. So what I can see is like in the COVID times, you could see that the Dow Jones or the Nasdaq index or S&P 500 or Nifty 50 or Sensex took maybe 70% it was down. Okay, and now you can see that it is all-time high. So whenever it is high, you don't have to you may not know how much high it will go. Whenever it is down, you don't know how much low it will go. So basically it will fall and rise. So you can always play, if you're playing on the big stocks, you can just keep buying in small quantity and keep going on. Okay, and you should have portfolio stocks, not one stock. Have 10 to 20. 10 is good, 15 is good, maximum 20 stocks across industry and balance. Maybe you should have a bank, you should have a pharma, you should have an IT, and have good franchisee in your portfolio so that when you invest into it, you can be having a peaceful sleep. The next rule is practice and learn. Start small. Do not take any free advice. Make mistakes small and grow. So it's better to make mistakes, be accountable for that mistake, and then grow than trying to blame everybody around like why it failed. And there's no point trying to tell stock market is like this, because stock market will behave that way. Stock market will have some operators who will take some stocks up and down. You need to be having using your brain and due diligence to really see that you can practice and learn it. Okay, so if you really see it's highly risky, get to mutual fund if you're unsure to manage. But you should also manage the mutual fund, because I was at the myth that mutual fund can be left alone. But even mutual fund can be managed by looking at your indexes and see like if it's a high index, you buy low index, you can buy more. It can still matter for you in a mutual funds, because you're not able to see this high and low. That's where some money is keep going. If the market is just going to be high and high for a long time and very stable, then you're not making much money in the mutual fund. Okay, so it's basic mathematics. If you think you can make money in mutual fund also by managing it. Okay, there is no logic in stock market. There is a bull, there's a bear, and there's a pig, and they're going to continue in cohesion. Somebody has to sell to make, somebody has to make a profit, and there are people who will be hit bad, which is actually called a big wag. Somebody has to be hit bad because he has done a wrong decisions in the stock market. So this cycle will keep going on. Somebody who's at the low level will go into a bear market, get into a bull over a period of time after he understands, okay, this is what is happening. And the next thing is simple common sense. Buy when low, book partial profit when high. Always protect your capital and making huge money. If you can protect your capital, I think that's the best thing you can do in stock market. And then you make money. So if you can't protect your capital, sometimes you'll see high profit and the entire profit will get washed away in the next iteration. Okay, so that's a simple con. And do not wait for market bottom high. Nobody could knows them. Just keep buying in small dips. Whether you're buying or selling, do it in small dips, and you can never predict the market's ups and low. Okay, and whenever the market is in a very abstract situations, you really don't know why it is going up, why it is going, keep cash with you. Okay, wait for the time so that you can invest. So if you put all the money in the wrong place, you can put the money into a debt fund, or you can put it in a fixed deposit, so that when there is, or a bond, whenever there is more stability, you can buy. Okay, or you can buy it in gold, and you can alternate between these two. So that is being very smart. The last set of three things is market rewards or continuously monitoring, understand global cues. So you need to know, like most of developing countries market had a lot of FII. So whatever happens in Dow Jones, whatever happening in the index of your European market will affect local market. So you need to really watch those global cues. And news can override any fundamentals or technical chart temporarily. Maybe I'm not telling like if the profit and loss is good, the growth is showing good. Still there might be stocks which might go down because the investor is exiting out, profit booking, blah blah blah. Okay, so always be very vigilant on this, and you are responsible for being vigilant. Even though there is going to be a lot of people who can help you later, but you have to be vigilant. Have portfolio allocation across gold, ETF we just saw, so that you can get a perfect balance. And I would go and suggest like learn basic max. What I have done is I made an Excel sheet of having 12 to 15 metrics. So you should know high beta stocks, low beta stocks. So what is high beta, low beta? Basically it's basic common sense. Like if the stock market is going up, certain stocks will grow faster, certain stocks will go lower also in that same rate. Certain stocks will be stable. So if you don't want to take risk, you might go for a low beta stock. Okay. P ratio of the stock is very important, like how much price are you paying to get a stock. Okay, and there are 10 lot of ratios which I don't want to discuss here. Evaluate these things, it will really help you to really make a difference. Okay, so that's something which we wanted to share. These are 15 rules of stock market. Hopefully all of us can play this balance, but take some time to really understand for a year or a couple of years before you can put your hard earned money into it, and always be self vigilant on this. Thanks for watching.